Hey, Sad Nation, what's going on? Hope you all had a wonderful weekend. Happy Mother's Days to everybody. Hopefully, you had some time to give your mom a call, send her some flowers, buy her dinner, or just spend some time with her, right? I think, especially for those of us that are a little bit older, and we start to cherish these things a little bit more as opposed to when you're young and you're in your teens, your early 20s, you really don't care because you're focused on you and nothing but you. So, just remember why I said this, and maybe in 10 years from now, when you come back to this video, you'll realize it. But anyway, look, I am gonna do a high level analysis for tomorrow, right? When I get really deep dive too hard, gonna go over, 4 to 5 equities real quick, just kind of get a glimpse of what the general picture on the bigger time frame the market's kind of doing. So we're gonna start with my usual, right? We're gonna start with SPY. That's what you see on the screen. So just I'll zoom in a little bit more as we get along. So what I wanted to point out is that we have a couple patterns going on, right? We have this potential head and inverse head and shoulders. Here's your shoulders. Here's your head. Potentially, this could be your other shoulder if this rejects off here. We do have a rising wedge pattern here or a flag, and we have a smaller one, right? So these two patterns and the rising wedges is coming to the downside, right? So I will quickly draw it out for you. This is, you know, what it would look like if it does break and then comes down, right? That's on, oops, apologize. That's on the bigger wedge, right? And obviously, if we have the smaller one, then, same thing, right? And eventually breaks out. So just something to look at. And if we are doing inverse head and shoulders, we're going to be this, 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 up here, potentially fail, come down here somewhere, find some support, and then make the attempt back up, and then maybe potentially break out. That is an inverse head and shoulders pattern. So now we got the patterns out of the way. Let's kind of go a little bit into further details. This is the neckline that I'm looking at. Like, this is where we rejected off back in last summer. We hit it again back in February. We rejected off it, and then we did tap it again early May, and we rejected off again. So, but as you can see, we're getting tighter, right? Lower, like higher, higher lows, higher highs, higher lows, higher highs. We're a reversal technically, right? And if we break up this up here, which is the 430, that's the break of structure. But you can see it's getting tighter and tighter and tighter. Some things you look at as I zoom in. We do have this gap up here, pretty much from 420 to 421. This is the neckline, aka where there's a lot of resting orders, order blocks, liquidity, however you want to name it, right? From 415.5 to about 420. We do have another gap here, from 414.8 to about 415.3. Not big one. We do have this other gap that we gapped up due to, the big tech earnings that we had in the last couple of weeks, from 407.2 to 408.6. So that's kind of, we talked about the gaps, we talked about neckline, we talked about pattern. As you can see, the EMA clouds are still bullish. And all these lines here are just going to be your highs and lows for the daily, weekly, and monthly. I just didn't label it out just because I'm trying to keep it a little bit more visually clean so that you all can see what's going on versus seeing all this text on the screen and get confused. The biggest thing I want to point out is for the daily cloud or the daily candle, it was an outside bar, right? We ended up taking out the high and low of Thursday's action. So Friday was an outside bar, which leads to me because we pretty much closed above last week's 50%. I'm a little bit bullish going to tomorrow, but it will really depend on what happens in futures in about 30 or so minutes, right? Futures rockets up, then we have a good chance to make a 3-2 up tomorrow, potentially hit last week's high or even this gap and then reject and come down, or even this neckline. Or if futures tanks tonight, or I should say, or stays flat, then we might just consolidate and make an inside bar, right? It's a pretty big range, right? From 409, 409 flat to about 413.6. So that's a decent range for SPY. SPY's been trading in this about like a $3 to $4 range. So if we do stay flat, we might consolidate. And if we do get too close, I would say below 410.5, then we have a high probability of going 3-2 down. Again, momentum right now is, it's been, sellers come in, take control, and buyers reverse at the end of the day. That's why you see all these wicks on the bottom side. So right now, it's just saying we see the buyers are here. However, we probably get right into some kind of exhaustion, and it did bounce off. Probably like the 32 or 30 EMA on the daily time frame. So kind of what I'm looking at for tomorrow is maybe be a 3-2 up or 3-1. But if we do get a 3-2 up on Monday, then I'd be looking for a 3-2-2 reversal downside, and vice versa. If we get 3-2 down tomorrow, I'd be looking for a 3-2-2 up on Tuesday. And if we have a 3-1, then it really depends on where that is. That one is in relation to the close. The higher we close, the more likely we'll go up. The lower we close, the more likely we'll go down. We do have a lot of econ data this week. If I already posted that earlier today in the morning for you all, there's a lot of speakers coming on. There's a lot of data, some earnings. So it's going to be a very, very volatile week in my opinion. And also, we've been in this market balance for a while. This is considered consolidation, right? What you all don't realize is because these are daily candles, you're not seeing it as if it was like a 5 minute. Just imagine this was a 5 minute time frame without me telling you that it's actually daily. And we've been in this since the end of March, right? So, I want to say, 2 month consolidation almost, 4 to 6 weeks somewhere. That's a very long time. So once it move happens, it's going to break out. It's just kind of similar to here, right? We were consolidating not that long, right? From February 1st to about the 16th. And then we broke out, made that massive lay down. Same thing back here in November, right? November, December took a while, eventually broke down, and then same here. So it's like a basing, right? Just think of the daily time frame candles as intraday trading. It's no different. The only difference is that if you're playing daily time frame candles, you're going to get more timing contracts, right? You're not going to get 0 DTE. You're going to get something with maybe a month or two expiration on it to hedge against theta decay. But anyway, that's kind of what I see. If we drill to a smaller time frame, we can see that we've been pretty much in this consolidation, right? This channel, right? This 415 to about 409 channel for the last 3 trading days. So again, just really consolidating, and don't really see much of a pattern besides what we kind of drew out. I mean, we draw a smaller 30-minute time frame wedge if we want, but realistically, this is balanced. So futures tonight will really depict where we make the move tomorrow. Not saying a breakout, but just where we kind of head for the first morning session. All right, let's go look at the quad now. Let's start with Apple, right? So Apple, I drew this out already just so try to save some time. Again, we do have this inverse head and shoulders pattern, shoulder, head. We also have this rising wedge pattern, and we also have this neckline order, order block, whatever you want, however you want to call it, liquidity, basic supply, right? The thing to note is that Apple, same thing, right? It is on the bullish EMA cloud. We actually made a 2 down, so we actually have a 2-2-2 up reversal tomorrow, potentially for a bullish Randy Jackson on Apple. If that happens, that could pull SPY up. Remember, Apple is the most weighted on QQQQ and SPY, so it has a big impact on it. Something to note is that we did have a hammer, so that means the buyers are here. We all are also running up against this neckline. You can see that we pretty much tapped it on Thursday, rejected, and then we're looking at this again. So ultimately, I would love for it to come up to somewhere around here where it hits more supply and hits the trend line, and eventually get rejection, breaks down, and tests this gap, right? That would be nice if we get to like the mid 170s, maybe even 180, and then reject over the course of 3 to 5 trading days and get back into the 160s for a good 10 to 15, 20 point move. So again, based on the way this is setting up, it looks like it might be a Randy Jackson bullish to the upside. So, and we have consolidation here, right? This is consolidation here as well. So we have a flag. But let's look at Amazon. Not exactly a fan of the Amazon setup. It's not clean in my opinion. We do have this neckline here that I drew out. We can say that this is the supply zone. And we tapped it when we had earnings back in February and just instantly rejected off it. I did draw a rising wedge, and you might all be like, sad, why didn't we draw it to this, right? Well, to me, this was an anomaly. This was because of earnings, and it just literally went up from 110, 105 to 115, which is very, very out of the norm for its movement. And also just because, look, I got one touch here, two touches here, three, four touches here. So you can say this was almost a false breakout, came back in, and then it's back in the channel. So that's how I look at it. You are more than welcome to draw how you want, but I look at it this way just because it was not normal in terms of the way and caused a big gap and then it got filled up. We do have this rising wedge, right? And it's sitting at this trend line again, and also with this supply zone, and this top here is the gap. We do have a gap to the downside, so we do have a 2-2 right here, potentially a bullish random reaction to the upside as well. Something else to note is that we are overextended on the EMA cloud. So the bottom of the candle is around 109.4, top of the EMA cloud is around 108.13. So we have essentially $1.20 overextension. So if we don't come down tomorrow, then we might potentially come back up, test Friday's high, test this supply zone, test this trend line, reject off here, and then I potentially might be looking for a week-long put to the downside and potentially try to test the EMA line, 8/9 EMA, and also the EMA or the gap, I should say. If that happens, of course, that would pull, whatever direction this goes, it would help pull SPY in that direction as well. So if we're expecting Apple and Amazon to do a 2 up tomorrow, then that could be meaning SPY might be a 2 up as well. Next one that can look at is going to be Microsoft. So Microsoft, same thing, right? I drew a lot of this stuff out, right? So you can say that we have potentially maybe inverse head and shoulders as well. Now here's your shoulder, here's your head, and we come back down, go up, right? So that could be it. At the end of the day, patterns are subjective. It's kind of you draw what you unfortunately want to see, but this does look like a inverse head and shoulders coming up. This is your neckline, supply, liquidity, order block. Again, however you like to determine it. The other thing to note is with Microsoft, we do have this, rising channel, which, we can say it's rising wedge. The thing that it's running into is we hit this trend line. Like you can see it hit multiple times, right, all throughout here. If we get back into the supply zone again and we fail to break above 315, 316, then we can come back down and we potentially test this gap again. So, of course, this could be something that over the next week or two that would happen. The good thing about Microsoft is that we actually have a 2-1-2 combo tomorrow, right? Here's your inside bar. Let me zoom in a little bit. So the reason inside bar, right? So you can see that this candle was inside this one. This was a 2 down because we took out the low, but we never took out the high. So it's a 2 down. This was an inside bar. Again, I just want you to take note, right? It was a 2 down, but it failed 2 down, right? Buyers pushed back up. So you can see wick. That means the buyers are here, guys and girls. So just keep that in mind. Really depends on where futures at. If futures open a little bit higher, we could do a 2 up tomorrow. I would love to see you take out the high of Friday, which is at 310.6. And then I would be aiming for the high of Thursday at 311.12, which is not much, right? 6 cents difference, right? And then potentially maybe target these highs as well, right? We target the 5th of May, Friday's high, and then potentially Wednesday's high. So that's what I'd be looking at for potentially a 2-1-2 up tomorrow. Again, I see it's a hammer, and with long sales tail wick on the bottom side. Again, if we are looking for that 2-1-2 up, and we're looking for a 2 up on Apple and Amazon, we're looking for up on everything, right? So it just means that potentially there. I would love for this to go up and hit somewhere around here, 316, and like I said, go down to the gap over the course of the next week or two, right? I'm probably looking for a week or 2 long expiration on that contract. So it's an inside day for Microsoft. The other thing to note is, look, on the weekly for Microsoft, we're way overextended, right? So we made this massive 2 up on the last week of April, and then we were, had a spinning top, not last week, but the 2 weeks prior, and then now we have another doji, right? And now it's red. So it just means that price is starting to, potentially make a shift, and we do. You can see that we are way overextended at Amazon or Microsoft's at 295, right? We're at 309 pretty much. Let me go back to Apple too. I think Apple is actually inside. I think it's inside week. Let me see. No, actually, Apple is barely a 2 up week. Again, something if Apple overextended, you can see the overextension pretty much hits that gap, right? So that's what we would be looking at. Not overextended on the daily. And then we talked about Apple and Amazon, right? So Amazon, you can see that it's an inverted hammer. So on the weekly, but the thing to note is that the EMA clouds are starting. You already started flipping, right? AEMA crossed to 21. It looks like it's about to cross to 34. So we'll see what happens this week. Okay, but let's go back to the last one that I'm going to talk about, and this is one I really like head into this week. So I am going to be eyeing this one for a potential long put swing, meaning for maybe 2 to 4 weeks, somewhere around there. Give myself some time in case it does decide to go against me. We have this inverse head and shoulders pattern, right? Here's your shoulders, here's your head, here's your other potential shoulders, here's your neckline, supply zone, liquidity, order block. Here's a gap up here, 132 to about 133.9. Another gap here, you can see 112.94 to about 114.4. And there's, I think that's it for the gaps, the immediate gaps, right? If we scroll back, we can find more. There's a gap up here and whatnot, but we're not concerned with that because, we're not going to back to pretty much all-time highs, right? Not yet, anyway. But inverse head and shoulder pattern, we do have this rising wedge. You can see we hit it on 1, 2, 3, 4, 5, 6, 7. So it's been a great trend line that has been a great resistance. So I would like for Google to potentially, you might see a pullback tomorrow and to the downside, right? And then it might eventually test this gap and then go back up and then hit the supply zone and then reject and then come back down. Google is overextended from 117.5 to about 111.2. We have this gaps and we have this rising wedge pattern. And so my only concern is we had the golden cross, right? I talked about this about a week ago. I said, hey, we have the golden cross, and usually what happens to the golden cross is we see a big upward movement, right? You can go back to my previous videos and my previous tweets, and I talk about it. So for Google, right, I said we had 2 up, but a double spinning top, right, or doji. So it just means that price is indecisive right now. It could go up or it could go down. But we do have a 2 up, maybe looking for a potential 2 reversal tomorrow on this, but we'll see what futures does. If we look at the weekly look, we had a massive week. This is just insane. This candle pretty much went from 105 all the way up to 118, right? So 13 point move. Like I said, I would love for it to test this neckline and then potentially start coming back down for a good 5 to 8 point move over a course of a week, which would net you a nice return on a week or two expiration. So again, for Google tomorrow, I would love for it to make a pullback, but knowing how strong tech has been recently, we potentially see another 2-2 continuation to the upside. I do want to say that if you are looking at Google, Apple, Amazon, any of these, or Meta, Facebook, aka, just keep yourself conscious, right? Even though we play the EMA clouds and we always know that when we're overextended, we come back, right? I can show you a lot of areas we're overextended here, which you pull back. We're overextended up here, we pull back. We were overextended up here, we pull back, right? Everywhere overextend down here, pull back, overextend here, it's just flushed. So there's always a, same thing, overextension, pull back, overextension up here, pull back. I can go on and can go back and show you all the thing. The thing is that don't get so caught up with, we're overextended, so that you're just going to play the opposite direction right away, right? We need more confluence, right? We need additional confluence, whether, if we're overextended like this and the candles are strong bullish candles, right? Well, it's probably not likely that it's going to pull back right that instance or that next trading day, especially since there's daily trading candles. But if we overextended and this is starting to show us like, hey, indecision, and then tomorrow we have a fail 2 up and it becomes like a gravestone doji or something like that. Well, to me, that's a strong signal for it to be, a potential to go short side because we have us sellers showing us that, hey, they pushed it down. So I just wanted to put that out. Don't think automatically as soon as we're overextended on either way that you can just play the opposite direction and it's a short win. It's not. But yeah, so these are things I wanted to point out. Again, we'll wait for futures. It's about to open shortly, and we'll see what it does. Anyway, look, this is just my market analysis for the week. It's not financial advice; it's for educational purposes and entertainment. So you all utilize it how you want, and hopefully that you learn how I'm looking at patterns, how I'm looking at the candles and whatnot. So again, one last thing for tech is that a big thing right now. The reason why it's been doing so well. A part of the reason why it's been doing so well is because the of the AI. Right, AI is big right now. So most of these tech companies are trying to do their own, and that's the reason why you start seeing market rally as much as it has been, especially for tech. Anyway, thank you for your time. Thank you for listening. Please hit the like button, hit the subscribe button, turn on notifications, and also hit the Twitter because this is where you get a lot of great information regarding the market and what I'm looking at and what I'm seeing and what I'm potentially looking to react to based on what the price does. Thank you again. I'll talk to you guys later. Bye.